for those seeking mid to long-term investment opportunities. In our previous video, we explored the price per square meter in some of the world's most in-demand cities. Now let's shift our focus to potential future hotspots for investment. These emerging locations offer a blend of affordability and strong growth prospects, making them attractive options for forward-thinking investors. Before we dive into the video, be sure to stay until the end to uncover the most promising locations to watch for your investments. And don't forget to subscribe to my channel for more insightful videos and content aimed at boosting your success in the real estate industry. While high property prices in major cities often grab attention, many metropolitan areas worldwide still offer more affordable real estate with substantial appreciation potential. Here are 10 such locations that provide a balance of affordability and future growth opportunities. Phuket, Thailand. Over the last 3 years, the real estate market in Phuket has shown promising capital appreciation, driven by strong demand and limited land availability. According to reports, properties in Phuket have experienced appreciation rates of up to 20% or more during this period. This growth is primarily fueled by increasing tourism, infrastructure development, and high demand for properties in prime areas such as Bang Tao and Rawai. Currently, Thailand allows foreigners to purchase apartments directly in their name without significant restrictions. However, the government is considering several measures to make it easier for foreigners to acquire land and villas. Proposed changes include extending land lease terms to 99 years. These changes, still under review and not yet approved, could strongly stimulate the real estate market. If implemented, property prices are expected to rise significantly, particularly in high-demand areas such as Bangkok, Phuket, and Pattaya, as these measures would make Thailand's real estate market far more attractive to international investors. In Phuket, property prices have experienced significant growth in recent years. The average price of condominiums and villas has nearly doubled, with a noticeable surge in land appreciation, which is reported to have increased by up to 70% annually. This trend reflects the growing demand, especially in areas popular among international buyers, including those from Russia and Europe. Looking forward, analysts expect that destinations like Krabi and Phang Nga Bay could become the next hotspots for investment within the next 3 to 5 years. These areas are predicted to experience a similar property boom, driven by rising tourism and infrastructure development, potentially mirroring Phuket's rapid property market expansion. Bali, Indonesia. Over the past 3 years, Bali's real estate market has experienced significant capital appreciation, driven by a surge in tourism and increasing foreign investments. Tourism, a critical pillar of the island's economy, has been particularly robust, with a marked rebound since the pandemic's restrictions were lifted. By mid-2024, foreign tourist arrivals were expected to exceed 6 million, surpassing pre-pandemic levels. This uptick has been fueled by strong demand from Australians, who make up nearly a quarter of Bali's foreign visitors, as well as a rising influx of travelers from China and Russia. The Australian market has had a long-standing influence on Bali's property scene, with Australians attracted by Bali's proximity, favorable exchange rates, and the allure of a tropical lifestyle. This demand has driven the growth in vacation rentals and high-end villas, particularly in popular areas like Seminyak and Canggu. What is next? If you're curious about the most promising real estate hotspots poised for up to 10 times capital appreciation, feel free to ask me in the comments. Now, let me ask you a question. What was the most visited city in 2024?
3, 2, 1.
Dubai, Emirates. In 2024, Dubai is set to be one of the most visited cities worldwide. According to TripAdvisor, Dubai is leading the pack in terms of global tourism popularity, thanks to its mix of modern architecture, world-class shopping, and a wide array of entertainment and cultural experiences. Attractions like the Burj Khalifa, the Palm Jumeirah, and Dubai Mall continue to draw millions of visitors each year. The city's status is further reinforced by the growth in international travel, with a surge of visitors from markets like China, Russia, and Australia. Additionally, Dubai's real estate sector is thriving, reflecting the ongoing demand spurred by the tourism influx. The capital appreciation in its luxury property market continues to outperform global averages, cementing Dubai's place as both a prime travel and investment destination. Dubai's real estate market has seen remarkable growth in the past 3 years. Capital value growth has been strong, particularly in the luxury sector. This growth outpaced other global cities like New York and London. The overall market has been resilient, with year-on-year growth consistently exceeding 30%, showcasing Dubai's appeal as a global real estate hub. This trend is part of a broader pattern of price increases, with prime property prices reaching levels not seen since 2014. Furthermore, demand for both ready and off-plan properties remains robust, with the luxury segment particularly strong. Overall, Dubai's real estate market continues to outperform global markets, making it an attractive destination for both local and international investors. So, with Phuket, Bali, and Dubai topping my investment list, let's quickly explore 7 more spots that are definitely worth keeping an eye on. Cairo, Egypt. Average price, $1,200 per square meter. Appreciation potential. With ongoing developments and a growing population, Cairo's real estate market is expected to appreciate significantly over the next few years. Bucharest, Romania. Average price, $1,700 per square meter. Appreciation potential. Bucharest's economic growth and investment in infrastructure make it an attractive market for long-term appreciation. Sofia, Bulgaria. Average price, $900 per square meter. Appreciation potential. Sofia is becoming increasingly popular among tech startups and digital nomads, fueling demand for residential properties. Lisbon, Portugal. Average price, $2,200 per square meter. Appreciation potential. Lisbon's tourism and expat influx have spurred real estate demand, leading to consistent price growth. Mexico City, Mexico. Average price, $2,500 per square meter. Appreciation potential. As one of the largest cities in the world, Mexico City's diverse economy supports long-term real estate appreciation. Budapest, Hungary. Average price, $2,600 per square meter. Appreciation potential. With its rich history and vibrant culture, Budapest is attracting international buyers and investors, driving property prices upward. Krakow, Poland. Average price, $2,800 per square meter. Appreciation potential. Krakow's cultural significance and growing tech scene contribute to rising property values. When it comes to real estate investment, just buy and wait. The key is purchasing properties in locations with strong long-term growth potential, whether it's because of rising demand, economic stability, or upcoming infrastructure projects. So, while you keep an eye on the emerging hotspots, remember, real estate is about long-term growth. You buy in the right location, and often, simply waiting as the market evolves will deliver significant rewards down the road. If you're planning to invest in real estate, let me guide you every step of the way. Whether you're a first-time investor or looking to expand your portfolio, book your first consultation hour for free, and let's map out your strategy together.